Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the S&P 500 and the broader markets with a big fear-filled dump day. Yes, I'm wearing the same outfit as yesterday. That means there's a lot of action in the markets the last 2 days. So looking at SPY, we had an all-out dump. And we started this morning, I'm still in my SPXS swing position. I sold 1/3 of it at the end of the day. But I started this morning saying, if we break this hourly resistance from yesterday, 325.21, I will exit my position. I had my sell order filled out. I had my finger on the trigger. And fortunately, the bears rejected the price first thing. We rejected from that resistance by about 70 cents or so. And then from that moment on, after the first 10 minutes of the day, the bears had absolutely nothing to worry about whatsoever. Every bounce we saw was either a 5-minute lower high or a 15-minute lower high. And this bounce at the end of the day, which was nice, a nice 1% bounce, we never changed the 5-minute trend. It went straight from the low to the high, new low of the day, and now just ping-ponging around after hours. So I will exit that position if we change the hourly trend. Any bounce on SPY here under the high of today right now is just a lower high. So the hourly downtrend is still easily intact. I'm starting to look for a bounce tomorrow. What I want to see, best case scenario for me, is a gap down open, and then I start scaling into longer term positions. My mindset is looking for 4-hour oversold bounces. I'm not looking 2 years down the road. If you are, that's fine. There are some names like Netflix and NVDA that are still easily in weekly uptrends right now. And most names, even though we've lost support, SPY has lost weekly support for the first time in 14 months. But you look at monthly timeframes for most names, and we're still easily in uptrends. So rather than going into long-term positions at all-time highs, you want to be going into long-term positions for monthly higher lows. So it all depends on the time frame for your trade as to what you're looking for. I am in a short-term bearish position still. I would exit another third of that on a gap down open, and then I would look to start buying some dips. And I would probably just be looking at SPXL, the 3 times leveraged bull for SPY to keep it simple. And maybe a name like Tesla, which is still in a daily uptrend. So that's what I'm watching tomorrow, but the open's going to dictate what I do tomorrow. Because if we open at 309, it's going to be completely different than if we open at 316. So I'm going to wake up tomorrow at 6 a.m. before the sun comes up, and I'm going to establish my game plan based on what pre-market is telling me. I'm not going to waste my time doing that tonight because things are going to change overnight. I know broadly what I'm looking to do. The question is, will that setup be there for me or not? Daily RSI is now oversold. That kept me from trying to play a bounce too early. This morning I said, I have no interest in an oversold bounce until the daily RSI is oversold. And by the time we got there today, there was just no sign of the bulls. It was easy to disregard any bounce attempts as anything more than just cooling off 5-minute RSI levels. So why am I interested in a bounce? Number one, daily RSI oversold. That in itself is not enough. But when you combine that with the 4-hour RSI being in the teens, and if we were to gap down open tomorrow and that 4-hour RSI is approaching the low teens and potentially single digits, again, all I have to do is scroll back and look at previous examples of huge fear. We dropped down in the 2018 dump, and that 4-hour RSI was down at about 15, and we had a V-shaped recovery. And actually, that was 2019. I take that back. That was not 2018. Here's 2018. That's down at 15 as well. So 2 historical bounces with V-shaped recoveries from 15 RSI on the 4-hour time frame, and we hit 16 today. That tells me it's time to start paying attention for a bounce. Always have an exit plan. If my game plan, let's just say rough example, I'm looking to scale into SPY. I have 1 entry at 310, 1 entry at 308, and 1 entry at 306. As soon as all of those fill, I then need a stop loss level established. Otherwise, if we free fall to 280, I just blew up a large portion of my account. Obviously, we don't want that to happen. If we drop down and I fill 2 of my orders and then the bounce starts, I pull my third order and then I try and position myself in a break-even worst case scenario, which maybe I sell half of my position after enough of a bounce and then put my stop loss under the low and let the other half ride as long as it can. I am pumped for tomorrow morning. IWM, clear bear break, clear weak close. We're also going to be watching for volume climaxes, daily time frame, more and more volume every day. And if we're going to see a volume climax, a nice setup for that would be a quick flush in the morning, a V-shaped bounce. Then you know you're going to have a high volume day when you have both bear volume and bull volume firing away in the first hour of trading. So IWM, weak close. Weekly support has been lost. We are now in a weekly downtrend. Is SPY in a weekly downtrend? No. Is it in a weekly uptrend? No. To be in a weekly downtrend, I need to see a lower high and a lower low to confirm that downtrend. I would say we are neither in a weekly uptrend nor a downtrend. IWM is a weekly downtrend because of that lower high and lower low. That's how you confirm a downtrend. So we zoom out to the monthly time frame for IWM. We could say anything above 144s is a monthly high or low. We're still a solid 8% above that level. Again, I'm not going to do it on every individual name, but go back and look at historical 4-hour RSI levels and where we have bounced, where fear has been maxed out in the recent past, reminding ourselves it can always be worse than what we have seen in the past. But that's what the guide is for us to be looking at. And again, IWM, anything under the high of today is just an hourly lower high. QQQ, increasing bear volume each day, big old flush. Weekly support has been lost. Monthly, are we going to lose this monthly uptrend? Well, we can pull back another 20%. Maybe not that much, 18% or so. Yes, it's a big monthly bearish reversal candle, but long term, we are definitely looking for a monthly higher low to form. Hourly chart, anything under the high of today is an hourly lower high. 4-hour RSI with extended hours on. Go back and look at historical levels and where we bounced in the past. XLF has been weaker than QQQ the last 2 days. RSI oversold on the daily. Weekly chart, easily losing the uptrend. Monthly, plenty of space for a higher low above 25.92. We can pull back over 10% and still be in a monthly uptrend. Hourly time frame, anything under the high of today is just an hourly lower high. I just went over this in the live stream at the end of the day, but I'll do it again. Just as an example, 3 ways to play this bounce. Let's just say we open where we closed, which isn't going to happen, but if that happened and the bounce starts, an aggressive bull is trying to catch that bottom. That's usually my style. I love oversold bounces. It's one of my edges as a trader. That's the highest risk, highest reward, trying to get in for the bounce and then just looking for an hourly lower high. A more conservative bull is going to wait for the hourly bounce to set the lower high, and then on the pullback for a higher low, if the bounce is big enough, we're then going to be looking to scale in using the low as our stop. And the most conservative bull is going to wait for the hourly trend change and hope that that bounce gets a couple days of follow through. Before we continue, one more note. The worst case scenario for market bulls would be a bear flag after we bounce. Because if you go back and look historically, this market V-shape recoveries from fear dumps. V-shape, 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 V-shape. What you don't see on any of those examples is an all-out dump on high bear volume, a bounce to set a very weak lower high, and then another high volume bear leg down. If that happens, we are going to say, whoa, this is different. So the size of the bounce, once we do bounce, will be very significant in determining a couple things. Let's say this was our bottom again. There's no indication of that, but if it were, if we only bounce to 316, we could easily bear flag to a lower low. If we bounce to 320, we have way more space for a daily higher low to then try and form for the trend change. Size of the bounce will be key in determining likelihood of continuation for the bears or bounce follow through for the bulls. XLV, all out dump. Weekly support breaking. We are now in a weekly downtrend, lower high and lower low. Monthly time frame, anything above 87.20 is a monthly high or low, 10% space to work with. We haven't even pulled back 10% from the all-time high, and we can pull back 10% from here and still be in a monthly uptrend. Anything under the high of today is an hourly lower high. Peek as to what that 4-hour RSI is doing and its historical levels. XBI, still holding weekly support, 88.05, so that's notable. Not many sectors holding weekly support at this point. So that's notable. Anything under the high of today is an hourly lower high. And we'll see if 88.05 support can hold tomorrow. Nice to have that level to play off of, where if we were to gap down open and we see some weakness first thing, 88.05 support. SMH dumping, weekly support is lost. Where's our last monthly high or low? Anything above 107, we can pull back 25% and be in a monthly uptrend. Again, all about perspective. Are you looking years out and at the monthly uptrend, or are you looking days out at an oversold bounce for a flip? Hourly, anything under the high of today is a lower high. 4-hour RSI is crushed. Everything's going to bounce when SPY bounces. Some names hold up better when SPY is seeing weakness, but as far as bulls having any confidence in bounce follow through, 95%, that's a made up number, 95% of stocks. Squirrel just scared me, climbing up the window into the window feeder. 95% of stocks are going to have to see SPY bounce to correlate with that bounce. Some names like Tesla held up well while we were waiting for SPY to try and bounce. SPY was dumping while Tesla was just seeing these little lower highs and lower lows, no real bear follow through, holding up really well, but no bulls going on offense until the S&P 500 bounces. Congrats to the VIX bulls, follow through, weekly chart, breaking all kinds of levels. 3620 is the only thing nearby, and that is the December 2018 dump low. Hourly uptrend remaining intact. Anything above 2260 is just an hourly high or low. Bears are looking for longer term shorts in the volatility sector for when this dies down, whether you're playing the market bounce or playing the volatility index to pull back, but have to see a loss of the hourly uptrend to have any confidence that the temporary top is set. Gold just had a 4-hour bear break. So 4-hour lower high and lower low. Why is gold going down while the market is dumping? Well, it's not always tick for tick inverse. Remember how well gold was holding up while SPY was at all-time highs. Gold just ran out of buyers. Everybody that was going to buy gold in the short term did so. I saw something about a huge sell order, people talking gold manipulation. Whatever the reason, we're looking for a daily high or low to form at this point, and there's further downside possible because the S&P 500 has not started bouncing yet. So you look at this gold chart, and you look at silver, which is weaker. Look at that dump on silver. 4-hour time frame, just a straight fall off a cliff. Gold gaining on silver significantly as XAU, XAG breaks out. Clearly gold is stronger than silver. Bull miners pulling back on the daily and closing at the low of the day. So the setup is here that if you're in dust, you're fairly comfortable because you're saying we closed at the high of the day and the S&P 500 hasn't even bounced yet. So if the S&P 500 bounces tomorrow, let's say, we're going to look for that to add to further downside potential pressure on gold and further upside on bear miners. Still definitely just looking for a daily lower high on dust, but maybe the bulls can squeeze out another leg up. Oil, on the verge of confirming a weekly bear flag. Only support is 49.41. Inventory report tomorrow is either going to confirm a new leg down or defend that support and have a bit of a double bottom. Natural gas, still looking for a daily high or low, no sign of it. When you see a move like this, it's a great big bull move, but you have to remind yourself this is coming from the low and we have not changed the trend. You have to remain skeptical. Say, yeah, it's a great move, but if you do not form a higher low and higher high, there is no follow through. And this is an example where we saw a big bounce and we're giving it slowly back because of the lack of trend change. SPY did that at the end of the day. Huge 1% bounce, no 5-minute trend change, gave it all back. That's where we stand in the market for tomorrow. We'll see what we get. I will be quick to exit SPXS. If we gap down open, I will exit half of what I have left, and I'll still use the hourly trend as my guide on the remaining third. And on a gap down open, I will be interested in a bounce mindset. I did not have a bounce mindset today. I wasn't standing there trying to position myself for bounces the entire day. Towards the end of the day a little bit, but if we gap down open tomorrow, I have a bounce mindset for the entire day. Hope you're well. Stay safe out there. This is why I love being a day trader. I know not everybody can day trade. It takes a lot of time and commitment and a lifestyle, but to have my account be able to go up while the market is dumping like this is so empowering. If I'm going to lose money, it's going to be because of my decisions, not because of a market pullback. That's why I don't like long-term portfolios, but someday I will have to have a long-term portfolio, not as long as I'm day trading every day. See you next time. Do good things. That's why you leave weeds.